Now, traders say that at the primary market auction this week, Nigeria's Debt Management Office took advantage of healthy subscription levels to raise 142.76 billion naira across the three tenors on offer. Dumebi Udegbunam, a fixed income trader at UBA, now joins me on the line from Lagos for a recap of trading activities at Nigeria's fixed income and forex market this week. Dumebi, welcome to Closing Bell West Africa. Could you quickly talk us through what factors shaped trading activities at the markets this week?
Good afternoon. Thanks for having me. Basically, the treasury market traded on a bullish note throughout this week. We saw a lot of demand on the short-term bills, and also we had a PMO and an OMO auction this week. The PMO auction was highly subscribed, and the DMO was able to raise 142.76 billion, with an increase in rate on the 91-day bill from 1.65 to 2.5, an increase in 182-day bill from 2.49 to 2.85, and a stagnant rate at the 354-day bill at 3.84. While at the PMO auction, we saw a low sale at the PMO auction. This is because of two reasons. Basically, I feel that the CBN is comfortable with the liquidity and it can reach over around 300 billion, and they were not comfortable with the rate which banks bidded for at the PMO auction. On the bond side of the market, we saw a very mixed sentiment at the market as market participants were waiting for the release of the revised Q2 bond auction calendar. From what we saw from the calendar, we saw an increase of about 45 billion in June, from 60 billion offered initially to 104 billion. This shows that the federal government, in line with the increase to borrow more funds, is 5.36 trillion deficit in the budget. We saw a 105 billion increase to follow the line of the federal government, 850 billion domestic debt.
Dumebi, I lost you for a couple of seconds there. I couldn't quite make out your words. So permit me if my next question comes across to you as repetitive, but I'd like to know if all the factors you highlighted are connected in any way to why we saw demand pressure being expected for short-dated treasury bills instruments.
Yes, what we saw was as a result of excess system liquidity and no sale at the OMO auction. So we saw demand at the short end of the call from June and July.
So what activities do you reckon will shape the markets in the short to medium term?
Sorry, I can't hear you, please.
What activities do you reckon will shape or impact the fixed income and FX space in the short to medium term?
Well, we're going to see a very stable FX market. As we leave this week, we saw a revised budget from 10.5 trillion to 10.5 trillion, and we saw an increase in the past 13 days in the foreign reserves from 13 billion to 34.78 billion, which is an increase of 1.3 billion over the last 13 days. This shows that we are going to have a very stable FX market. Right on the 30-day end, we're going to see a lot of bullish sentiment as the system remains liquid, and bankers will invest excess liquidity mostly on the short-term bills from June to July.
So in your estimation, Dumebi, how did the FX market perform so far this week?
Generally, I must confess there's been a very calm trading activity in the FX market. In the INA window, we've been seeing very little volume traded, apart from yesterday where we saw about 40 million traded in the FX market. The range of exchange rates they have been between 380 to 390 on the foreign exchange market. So we are also seeing an increase in the foreign reserves over the last 13 days to about 1.3 billion increase. This is as a result of the concessionary loan given to us by the IMF, 2.4 billion, which is trickling into the system presently. So we're seeing a stable forex market, and we proceed to see such stability all through this week.
So I see you're projecting scarcity of dollar as part of your outlook for next week. What informs this projection of yours?
Well, the reason why we perceive the scarcity of dollar because of our king foreign earning, which is crude oil. has dropped by about from $60 to $50 to $30 right now, which is quite stable. So we're going to see the stability, and as a result of, we have a high sense of demand from the manufacturing industry and other industries that have been affected by the COVID pandemic and also the drop in oil prices. So what we're seeing right now is high demand not matched up with the supply.